Hey guys, I hope you're having a great weekend. In this video, we'll be talking about a few chart analyses to get you prepared for the week ahead. If you love the content, please like, subscribe, and leave a thought in the comment section down below. And if you haven't gotten our chart pattern playbook, like I always say, get that book. It's free. It's going to help you a lot. It's going to change how you see chart patterns and how you trade trends, right? And everything I'm going to be discussing in this video has been, thoroughly taught in that book, as well as my top three chart patterns. As you can see here, you can see on gold, we have this triangle, right, or rectangle. So there's a bullish continuation pattern, right, something like this that led to this move to the upside. Taught in the book. Get the book if you're interested in leveling up your trading strategy or your trading techniques. It's totally free. You can use the link in the description below. So we're talking about gold, silver, USD-JPY, GBP-USD, BTC, UK100, and the DXY. So we've got quite a lot of charts to go over. Sorry I wasn't available last week. I was really busy, so I couldn't put out a video. So now we're just going to do a brief overview of the market and see how we can spot out good trade opportunities for this coming week. So bear with me, please. This video may be longer than usual, but it's important we go through these charts because I think they are going to be really good, trade opportunities for this coming week. So starting with the gold chart on a 1 hour time frame, as we've discussed earlier over the last few weeks, we've been consolidating within a symmetrical triangle. Once again, taught in that book. Get a link, use the link in the description below to get that book. It's free. And we had this massive consolidation above the breakout. So we had a symmetrical angle, good breakout, consolidation, and another breakout to the upside. If you follow us on Discord as well, you would have caught this trade, or even my post on YouTube, right? So I posted about this chart on YouTube before we had this move, bullish move to the upside. I think I caught 1,000 pips from this. Decent one in my opinion. If you're part of our Discord, you would have caught this as well. So right now we're trading above this area of resistance, now probably turning into a support. So what I'm watching out for is more consolidation over here, right, followed by a big move to the upside in continuation of the already established, bullish trend. So BTC is still, gold, excuse me, is still bullish. So overall, so I want to see what price does above this area of resistance before I look for my fresh opportunities to go long. At the moment, I don't see any reason why anyone wants to go short on this, even if you want to, aim for quick profits. I don't think it's just worth it in my opinion. I think it's best to wait, see if price dumps, wait to see how price reacts to this level and this level before you start considering, going short. But for me, in my opinion, I think the market is geared towards going higher than going lower. So that's why I'm going to be sticking with my bullish thesis and looking for opportunities to go long. So a bullish case scenario, I want to wait for a consolidation, like I said earlier. So more consolidation that will give me a clearly defined area of value to place my entry before a move to the upside, right? If something like this happens, then you should get some sort of a bullish continuation pattern like this. Entry would be after the breakout, right? This is a conservative approach, right? So a breakout from that pattern would give you an opportunity to go long. Stop loss can be placed underneath the consolidation that leads to the breakout. And your take profit target, first one can be around these all-time highs where we had this double top, and you can trail the rest of your positions as we climb higher. This is my conservative approach to going long on gold this week, right? So for me this week, I'm going to be focusing on just gold and silver. Those are the two trade instruments I'll be trading. Currency pairs, I'm going to stay away. Indices, I'm going to stay away. But for gold and silver, they've been clearly decisive in their direction. That's why I'm going to stack up my positions across these two currency, across these two major trade instruments, right? So pulling up the moving average, so another opportunity to go long if you want to be more aggressive. So pulling up the moving average, you can see on the 1 hour time frame, after this huge consolidation, we are clearly trading above the moving average on the 1 hour time frame. So 200 EMA, 200 SMA, we use them to track the trend. So what I expect is over the coming days, so over the next few days, I want to see this moving average creep up a little. So both of them go as high as these price levels. And I'm going to go long. So this is the aggressive approach. So if we do get that consolidation, for example, and we see price tagging these moving averages, then I'm going to go long for a decent, tight risk to reward ratio, and then look forward to a bounce, right? So if this happens, you can jump in immediately with tag these moving averages, then followed by maybe a bullish engulfing candle or just any candlestick reversal pattern to give you some sort of a confirmation, right, of a reversal. You go in after that bounce, stop loss can be placed immediately under the lows of the candle that bounced off this moving average. So this gives you an extremely tight stop loss with a very good risk to reward ratio, right? So you could even see a potential risk to reward ratio of 1 to 5. So if that happens, stop loss could be as high as 300 pips, and take profit could be as high as 1,000 pips. So risk to reward ratio of 1 to 4, right? Decent, very, very decent trade opportunity in my opinion. So this is the aggressive approach. So if you're not part of our Discord, join us on Discord. So as the trade evolves, I'm going to share more charts, let you know when I'm going in, when I'm exiting my positions. Just use the link in the description below to join us on Discord. It's totally free. You have nothing to lose, right? And these things are also taught in that book, Chart Pattern Playbook, because what I expect here is simply a bullish continuation pattern. So it could come up in any form as a bullish flag or a bullish rectangle. As long as we do get a bullish breakout after the bounce, then we're good to go, right? So that's it briefly for my take on gold. If you agree with me, leave your thoughts in the comment section down below. If you disagree with me, also leave your thoughts in the comment section down below. So moving on, we're talking about SIVA. So this is another interesting trade instrument I've been trading over the last few weeks, and it's done really well. If you've been part of our Discord, then you should understand what I'm talking about, because we've been trading this stuff all the way from these lows here, right? Grabbing all the pips all the way to this consolidation. Last week we grabbed even more. So the last video I made, we anticipated, the last video I posted on YouTube, our last weekly analysis, we anticipated this consolidation and hope to go long when we break out, and that happened, and just clean and easy profit, right? If you follow my videos. So that's not to say it works all the time, right? I have been wrong so many times, but when I'm right, it's really good. So just go with me along to see how I'm going to trade SIVA this coming week. So once again, chart patterns, bullish continuation pattern, because the trend is still bullish, right? We just broke out from this massive consolidation. So I think this is going to grind even higher, similar to the movement we anticipate on gold. If you haven't gotten that book yet, get that book. It's going to help you a lot. So right now, we have a small area of support over here. So I'm going to wait for a consolidation. Hopefully, we tap into this area of support, then I'm going to go longer aggressively if we do touch this support, right? Aiming for higher price movement to the upside. So I'm going to aim for maybe 500 pips on this, maybe just a move back to these highs, then I pull out some of my positions. So the reason why is because same thing happened here, right? So we had this massive move, consolidation, we tapped into the nearest support, and then we bounced off. So I expect the same thing to happen here. It's just price action, right? It's all about probabilities you get. So if it's all about probabilities, then you are likely going to get a bounce from this price level, because it's a good support and a good bullish trend. I'm going to show you something else to support that move, right? Coupled with the fact that we are currently close to being in the oversold level in the RSI, and if you pull up your moving average, I love my moving averages, right? So by the time we go there, moving average on the 1 hour time frame, 200 EMA, 200 SMA, might have crept up to this area of support. And if we get to this area of support, then that may just be a very good confirmation that price is going to go higher, right? Because I'm going to keep going long until at least we break below these moving averages on the 1 hour time frame. So as long as price keeps trading above this moving average on the 1 hour time frame, then I think we're good to go going long, as long as we get those confirmations to go long. So the confluence here is that we move back into this area of support, RSI taps into the oversold level, and we bounce off the moving averages on the 1 hour time frame, 200 EMA, 200 SMA. That's enough confluence for me, and I go long. Yeah, so if I go long after the bounce, stop loss can be as low as 100 pips, which is decent in my opinion, and your take profit target could be as high as 500 pips, right? So risk to ratio of 1 to 5, decent, like extremely decent. That's the reason why I watch out for these moving averages, to get those solid sweet trade opportunities with good risk to reward ratios, right? So that's the reason why I'm anticipating a move into this area of value, so I can go long aggressively. But for a conservative trader, you may want to wait for more consolidation, right? Be more patient, wait for something like this, then give you a continuation pattern followed by a breakout, right? So you have no idea how long this is going to take, if it's going to take a day, 2 days, 3 days, but price can move really fast, right? So if you get something like this, then you want to go long after the breakout from a pattern like this. Stop loss can be placed underneath the consolidation list of the breakout, or underneath the moving average if we get to this price level by then. And take profit target, first one can be as high as these highs, and you trade the rest as you go higher. This is how to ride trends effectively. So one of the ways to ride trends, this is how I do it. Of course, if you want to follow, just try it on a demo or very low risk and see the wonders. So meanwhile, trading is risky, right? So what I say, what I teach is just my own opinion. I may be wrong. I've been wrong so many times, but it's just how I trade, and it works for me 70% of the time, right? And if you've been following my chart analysis, my setups, you will know that my, these things, my approach to the market has been absolutely excellent, right? So what matters the most is using good risk management based off of your risk tolerance and your trading capital, right? So just because I'm deciding to go all in over here doesn't mean you have to do that, right? So do your own research, use these videos as simply educational content and a guide to help you navigate this market as price action evolves. That's briefly for silver. Moving on, we're talking about USD-JPY. Decent one, of course. We've been following this for quite some time, but I haven't talked about USD-JPY in a bit. So USD-JPY right now, good bullish trend. So this is a daily chart, of course. So bullish trend, we had this massive consolidation. We had a good breakout from that consolidation. So I'm going to zoom in. So go to the lower time frame, see what's happening over here, because this is where we want to focus on taking our next good trade opportunity. So 1 hour time frame, for example, if you zoom in, you would notice that we had this consolidation, right? A bullish flag, good breakout, but that was short-lived, mostly because of the DXY. But I think we're going to go higher, right? So putting up the moving average. So moving average, going to the 4 hours time frame, what do you see? You notice that the price level where we had that first bounce was directly on top of the moving average. So you can see, so if you went long immediately when we tapped this moving average with a very tight stop loss, then this would have been a very good trade opportunity in my opinion. So for me right now, what I'm watching out for is simply a slight move back close to this moving average. Then I'm going to go long aggressively, right? But the thing is, this week I've decided to trade just gold and silver, so I may not be trading these, but I don't want to write this off just yet because this may present us with very good opportunities for the week ahead. So for those who trade currency pairs, yes, what I would do, right? I'm going to wait to see if price goes closer into these moving averages, so that when I go long aggressively, I can get tighter risk to reward ratio, right? So if I go long around these price levels, my stop loss can be as low as this price level. Take profit target can be as high as this highs. And if you take a measured price movement, this will give you an approximately 65 pips stop loss or 70 pips stop loss with a take profit target of approximately 250 pips. So this is a risk to ratio of 1 to 4. Decent, like pretty decent. And if you could get trades like this, risk to ratio of 1 to 3, 1 to 4, 1 to 5, 1 to 10, which I've done so many times, then you will just see your account start growing consistently over time, right? As long as you apply good risk management principles. So this briefly for USD-JPY, nothing much to see here, because I don't see any reason why you want to go short, because this is clearly a bullish trend, clearly a bullish structure. And if you want to learn more about how to trade bullish continuation pattern like what you can see right now, that book, Chart Pattern Playbook, is going to help you a lot. Use the link in the description below to get it. So something else to watch out for a more conservative approach. So what I just explained is an aggressive approach to trading USD-JPY. So for a more conservative approach, you want to take these highs like this, watch out to see what price does with the moving average. So if price comes down here and gets a bounce, then you want to expect more consolidation over here, followed by a bullish breakout to the upside. If this happens, then you could confidently go long after we take out this trend line, understanding that this moving average is acting as a very good area of support. So by then, this moving average might have crept up all the way to these price levels. So something like this. So when you go long here, your stop loss can easily be placed underneath the moving average, and you can ride your trades as we go higher. So take profit targets could be as high as this highs here, and second one could be as high as this highs. Mind you, this is a 4 hours chart, so if you're doing your own review, do this accordingly. Like, make sure you understand the time frame in which you're going to execute your trade and time frame in which you are watching out for your confirmations. So for me, my confirmation is going to be done on the 4 hours time frame. Entry and execution is going to be done on the 1 hour time frame. The reason is because the moving averages on the 4 hour time frame is what I'm watching out for to see if they maintain a clear area of support. So if that happens, then this is a no-brainer for me, in my opinion, and it's just going to help you manage your positions as you climb higher on USD-JPY, right? That's briefly for USD-JPY. Moving on, we'll be talking about GBP-USD. So GBP-USD, 1 hour time frame as well. This one has been a decent one in my opinion. Last week or last 2 weeks, I think, I dropped a setup on GBP-USD telling you giving you my take on the market with a potential move to the upside. but I think we mistimed this a bit because I thought this bounce here was the main bounce, then we're going to go higher, but unfortunately we had another bounce taking out my stop loss, but I didn't enter the trade again, right, because I moved on to focusing on gold. So for GBP-USD, we're currently creating higher highs and higher lows. Chart looks bullish. It seems, going to the 4 hours time frame, for example, it seems this bearish move to the downside has ended with this, somewhat of a double top or W pattern. I want to see if this is going to hold or we're going to crumble, right? So for a bullish case scenario right now, if you pull up the moving average 1 hour time frame, of course, you would see that this moving average is acting as a very good area of support. So for a bullish case scenario, you want to see a bounce. So a move into this moving average, if we do get another, move to the downside, followed by a bounce to the upside. If this happens, then you want to go long after the bounce. Stop loss can be placed underneath the moving averages that's acting as support. Take profit targets could be as high as this price levels. For the first one, second one could be as high as these price levels, depending on how long you like to hold your trades, right? I wouldn't be trading this because I have 2 good charts I'm going to be following up with this week, which is gold and silver, as I've explained earlier. But for those who trade currency pairs, then this could be a very good opportunity to go long, right? So this is a bullish case scenario. So it's all about probabilities. And I think there's a very good chance we go higher because the DXY is currently getting weaker, which we're going to explore in a few minutes, right? So that's a brief for the bullish case scenario on GBP-USD. Nothing much to see here. It's just a 1 hour time frame. So let me just zoom in a little. So like I said, to go long, bullish case scenario would be waiting for price to come back into this moving average, bounce off where you pick your trade opportunity. So similar to what happened over here, right? You can see the slow grind into the moving average. We didn't quite, hit the moving averages, but we're close enough. So if we do that, a bounce or a reversal give you opportunity to go long. Stop loss can be placed underneath the moving averages because by then they must have crept up all the way to these price levels, right? So if this happens, then you can place your stop loss conveniently underneath the moving average while you try to ride the trend as we go higher. But for a bearish case scenario, I would hope that price comes down here, consolidates on the moving average, and just when we think we're going to go higher, we get a bearish breakout to the downside, right? But the reason why I'm skeptical is because this can be short-lived because we have a good support here, we have a good resistance which is probably going to turn the support here, and we have this other area of value here that could act as a retest or a solid area for a rebound, right? So if this happens, then you want to go short. After a consolidation, a bearish breakout like this, you can go short, right? So your short position will be placed after the breakout. Stop loss can be placed above the consolidation list of the breakout. Take profit target, first one can be placed here. This is not just worth it in my opinion. That's why I don't trade currency pairs, right? Except you hope for price to come back into this area of value, which so far right now I don't really see happening. But like, how the market works, right? We could get a flash dump all the way to these price levels and back up in continuation of the trend just when you're hoping price gets to this price level, right? But for a bullish case scenario, you see there's nothing absolutely holding the price back except for this resistance, this one, and this one. So you have a better opportunity for a bullish trade opportunity to make a decent return compared to going short, because then you have to hope we break through this area of support, you have to hope we break through this area of resistance, then you have to hope we get into this price level for a decent return. And this will give you a risk to reward ratio of, let's see, stop loss will be approximately 30 pips, take profit will be approximately 130 pips, so risk to reward ratio of 1 to 4 if we do get a dump into this area of value. But I'm going to show you the DXY chart to show you why I don't think this is highly feasible or plausible, right? So for those trading currency pair, this is just my outlook, this is what I think. Take with a grain of salt, do your own research, and as always, trade with good risk management. That's it briefly for GBP-USD. Moving on, talking about BTC. So Bitcoin was requested by one of our community members on Discord. I don't trade Bitcoin. I haven't traded Bitcoin for a while. I just, invest in this stuff, trading spots. But trading futures or margin, just not my thing right now at the moment. But because a community member asked, we're just going to review this briefly. So this is daily time frame, and we seem to have taken out this trend line. So you can see this lows, this low, and we've broken through this trend line. But I think before we see a substantial, movement either to the upside or the downside on BTC, we are likely going to see a move into this area of support, right? Which is going to be the deciding moment to tell if if Bitcoin rallies higher or crumbles to the downside. Something else to watch out for is, something else to watch out for would be this area of value as well. So we have a good area of resistance here, which is likely going to turn into an area of support. So just when you feel this one over here is going to hold, we may get a flash dump, right? Flash dump into this one, bringing bringing BTC USD to around 70,000 price level. Then we get a bounce to the upside. Very, very possible, right? Because Bitcoin works really well with solid area of support, right? So if this happens, then you want to look for potential to go long over here. Then if we lose this area of support, then you want to see price going lower, right? So going on to the lower time frame, this is daily time frame. I don't think anyone wants to trade on daily. So going to the 4 hours time frame first, you can see that we have something like this. So you can see, I'm gonna get rid of this. So you can see we've been, creating lower highs and lower lows. You can see lower highs, lower lows, downtrend, short-term downtrend, while we grind towards this area of support. So for me, I think this is gearing up for a bearish trade opportunity. But remember, currency pairs are extremely volatile, right? So anything could happen. Just when you feel you've gotten the perfect trade opportunity, wham, you see price going in the opposite direction. But at the moment, this looks like an ascending triangle, right, with pressure mounting towards the downside. So bears seems to be in charge, because you can see this clear area of resistance, higher lows, right? Higher lows is supposed to mean, bulls trying to mount pressure to the upside, but this can only be confirmed when or if we break this area of resistance. So zooming in a little, mind you, this is the 4 hours time frame, right? If you go down to the 1 hour time frame, for example, then you can clearly see, this clearly, right? So 1 hour time frame, I'm going to get rid of this trend line so we can clearly see what we're doing here. So 1 hour time frame, you can see we have a clear area of resistance over here. We have clear higher lows, right? So for me, I want to see price consolidate more. I don't want to see price just break through right now. It could happen, but a decent consolidation, so more consolidation gives you better confirmation, because if we go down, consolidate more, for example, and let's say we break out again from this area of resistance, then you could go long, because the bullish trend on the long-term chart, daily chart, is still intact, very much intact. So if we get a bullish breakout from this area of resistance, then you could go long, right? But you have to be very careful, because BTC can be extremely volatile sometimes. So stop loss can be placed underneath the consolidation, at least to the breakout. Take profit targets could be as high as 106k, right? So this will give you a risk reward ratio of LCL approximately 250 pips, right? Yeah, this is a 250 pips as stop loss, and a potential take profit target of 1,200 pips, right? So risk to reward ratio of 1 to 6 sounds and looks really decent, but I'm skeptical because of the volatility you could see on currency pairs, So BTC USD, it's a currency pair, of course. I said currency pair, a cryptocurrency pair, yeah, excuse me. So something like that is what you watch out for to go long, in my opinion. While for the short case scenario, why I think the short case scenario is more solid at the moment is because the trend leading to this pattern has been bearish. So you want to watch out for something like this, a move here, consolidation, and then a bearish breakout to the downside. So if this happens, then your entry can be after the breakout, stop loss can be placed above the consolidation list of the breakout, and your take profit target could be as low as first one being around these lows, right, which is decent in my opinion. Second one, if you hold longer, could be as low as this area value we saw on the 4 hours time frame or on the daily time frame, right? So yeah, on the daily time frame. So going back to the daily, so it could be as low as this one over here, or even this one, right? So that's it briefly for BTC. Brief outlook on when to go long and short. So just to reiterate, we have a good bearish continuation pattern, but this is only confirmed if we get a bearish breakout from the downside, right? Then go short. But I think if we get a bullish breakout from this area of resistance, then you could also go long, right? Because the viral trend is still intact. That's it briefly for BTC USD. Moving on, we're talking about UK100. So UK100 also sent in by one of our community members in Discord. This trend looks bullish. So 1 hour time frame, trend looks bullish, but there's still so many questions left unanswered, right? So for me, I wouldn't be trading this at all because it doesn't look as clean as I want it to. So we have a strong bullish trend, obviously higher highs, higher lows, but the current pattern suggests we may get a bearish breakout to the downside, and we may also get a bullish breakout to the upside. So to trade this, for a bullish case scenario, I want to see price going back into this area of resistance, consolidating a little, and giving us a good breakout to the upside. And this could be a very good opportunity to go long. So going long above this area of resistance. Stop loss can be placed underneath the consolidation of this breakout. First take profit target could be as high as this area of resistance. So this is how I'm going to go long on UK100. So this is the index that tracks the top companies in the UK, I think. I don't trade this at all. I haven't traded this at all. But this is how I'm going to go long on UK100. And for a short position, I think I would just stay away from going short because the trend is bullish and any short movement can easily be short-lived by any, slight chance of an area of support. So like something like this, right, could stop your short trade position from going lower. But for a bullish case scenario, when we take out this area of resistance, then you have almost nothing stopping you from going higher, right? So trend is bullish. We have a clear structure. We break this resistance. I go long for those trading this. But for a short trade opportunity, I wouldn't be going short at all. So putting up our moving average again, this could help us see where we are at, right? So on 6 hours time frame, you can see that we've been trading above this moving average on the 6 hours time frame since June of this year, right? So since June or May. So right now we had a flash dump and reversed almost immediately, right? Just within a day or two. So right now we're currently trading around this moving average on the 6 hours time frame. So I can see why you may want to go short if we get a breakout from this trend line. But meanwhile, just when you're thinking about going short because we've broken this trend line, for example, then you have this moving averages here acting as an area of support to guide price back to the upside. So that's the reason why I'm going to be staying away from the short trade opportunity on UK100 and just focus simply on the bullish case scenario, which would be going down to the 1 hour time frame and simply waiting for a good breakout above this area of resistance to go long. That's it briefly for UK100. If you have more questions, leave them in the comment section down below or join our Discord. It's free. Use the link in the description below. And lastly, we're talking about the DXY. So DXY, we've been talking about this for weeks. Double top, area of resistance. I told you I have a good feeling that DXY is going to go lower and it's going to affect currency pairs, majors, and it's going to affect gold. And that has happened exactly as I said. So right now, I think we're going to go all the way low to this area of support. So if we come here all the way down to this area of support, you can expect gold to rally higher, GBP-USD, USD to rally higher, maybe USD-JPY maybe shaky a little, wants to go lower, but because the trend is still a very strong, solid bullish trend, the Japanese yen may, help the currency pair fight its way through to the upside, right? So that's it briefly for this week's analysis. I know it's been a long video, but if you love the content, please like, subscribe, leave your thoughts in the comment section down below. And if you haven't gotten our chart pattern playbook, also leave your thoughts in it. Also use the link in the description below to get that book. It's going to help you a lot. That's it from me guys this week. See you next week.